Yeah. So income from house property is one of the heads of income, right? Make sure you write the notes properly, and we will discuss the entire concept and then we'll start doing the problems. In between, if it's required, we'll do one or two problems, but first we'll complete all the core concepts and then we'll do the problems. And make sure, like I told you previously, you cannot learn tax without doing questions. You have to do as many questions as possible. Okay, income from house property. Okay, so here first thing we need to know what are all the concepts we have in this particular chapter, right? So we have around 5 to around 6 sections, we can say, but mostly uh, one section is very important, like 70% covers only one section. So these are all the sections we have. Section 22 is a chargeability section, like for every chapter there is a chargeability section, like this. In this chapter, section 22 is chargeability section. Now section 23, there is something called as annual value. Okay, there is something called as annual value, we will discuss. So finding out this is so important, and then our chapter 70 to 80% of the chapter is dedicated to this only, section 23. And then section 24 talks about deductions, like what is meant by deductions, right? So we can whatever the money, in this one the main deductions are interest on borrowed capital. This we will discuss anyway later. Interest on borrowed capital. So if I borrow any capital, I have to pay interest for it. So that is expenses for me, so that I can claim that as a deduction. I don't need to pay tax on it, right? If my income is 50,000, if my interest is 10,000, remaining 40,000 only, on 40,000 only I can pay the tax. So this we have to discuss in this chapter, which is important. And then section 25, not that very important, which actually very just a one line section. What are inadmissible deductions. And then section 25A, we will be talking about unrealized rent. I will explain all these things, don't worry. This is just an overview of chapter, what are all the things we're going to discuss. Section 26, we're going to discuss about co-owned property. And then finally section 27 is deemed ownership. But though you may see so many sections, our entire discussion, mostly to solve the questions, 90 to 95% of the questions and everything is filled with 23 and 24. Remaining sections are basically we need to discuss. It may be helpful while solving some MCQs or something, right? We don't know how the paper will be, so obviously we need to learn all the sections. So this is the entire overview of income from house property. If you learn all these sections, then our income from house property is over. Now first thing is chargeability section. There is nothing much to learn in this chargeability section, we can say. So what exactly chargeable to tax? What exactly is chargeable to tax? So first of all, under IFHP, if you want to tax anything under IFHP, you need to determine something called as annual value of the property. Okay, first of all, what is meant by annual value? See, annual value means is nothing but, let's just say in one particular area there is one building. So we just just estimate. Okay, so in this area, if you have a building, then you may get per year at least 10 lakh rupees as a rent. That is annual value. Like, expected rent for that property in that particular area, that is called annual value. How much money you can earn, how much rent you can earn because of that property, that is called annual value. So that annual value only we will tax. Okay, so first we need to find out something called as annual value. That annual value only we will tax it. Now the question is, how do we find out the annual value? What is the method? How do we find out? That is discussed under section 23. Okay, so section 22 says under IFHP you need to tax the annual value of the property. You need to tax what? Annual value of the property. Section 23 says methods, and entire concept will be discussed in section 23 only. How do we find out the annual value of the property? Okay, so that we will discuss in section 23. So that's all. There is nothing to discuss much about the section 22. So according to section 22, we need to charge the tax what? Annual value of the property. That's all. Now what is annual value of the property? How do we find out the annual property is discussed in the section 23. Okay, everything is discussed in the section 23. Now before discussing annual value, they mention something called as property. Okay, in our chapter name itself, income from house property. That means if you are getting any income from a house property, if you are getting any money from the property, then you have to pay tax under this head. Now the question is, what is property? Okay, so we need to discuss this part first. What is property? See, this you can say that these are the conditions you need to satisfy, then only it will come under the IFHP, or else it won't come under the IFHP. So you can say that first of all, property means you can say that building, right? Any building. So any building, if you are getting any money from a property, that will be taxed under IFHP. First thing. Okay, so let's just say this is a building. So if you are getting any money from that, we will tax under IFHP. What about the land which is connected to that building? So we will call it as land upper tenant thereto. They might use the word. In other words, land connected to such building, like garage, garden. From that land also, if you are getting any money, okay, which is connected to the building, I'm not talking about separate land should be connected to the building. Okay, this is called, we call it as, they may test in the MCQ, so that's why we need to learn these words also. Upper tenant thereto. So if the land upper tenant, the word meaning means connected. Okay, if the land is connected to that building, and if you are generating any money from that, like garage, garden, that also will be taxed under IFHP, right? That also will be considered as, first of all, property. So this is the meaning of property. Property means a building and any land connected to the building. Did you guys understand?
Yes, sir.
Now what if there is,
Yes.
let's just say there is a vacant land. Vacant land means what? It is not connected to the any building. Then do we tax under IFHP, or does this consider as a property? We need to know, right? So no, it will be taxed under IFOS or PGBP, as the case may be. Depends upon the situation, but it will never come under the IFHP, because we will tax under IFHP for the land only if it is connected to the building. If it is not connected, if it is separate, it is a vacant land, then we won't tax under the IFHP. Okay, this is one of the condition. First there should be a property, and then that property must be a building or land connected to the building. That's all. That is the condition 1. Then condition 2, another condition. So for this, assessee, our assessee, okay, assessee must be owner of the property. Assessee means whoever has to pay the tax, owner of the property. So now we discussed what is property already, right? For that, our assessee should be owner. Now when I meant owner, so he may be, there are two types of owner we can say, freehold or leasehold. Okay, first we will discuss leasehold. Leasehold means, let's just say I took a building for lease. Okay, I took a building for lease. I am not the owner of that building, I just took a lease for 5 years. Now the same building I am giving rent to some other people, I am getting a rental income. Now I am the lease owner, I am not the real owner, like I just have a lease rights. So this is called leasehold. So whatever the ownership you have, it may be freehold ownership or leasehold ownership, it doesn't matter, right? If you are getting a income from that property, it will be taxed under IFHP. Okay, so any kind of owner, that is one thing. Fine. Then, and also owner, this is just theoretical purpose, nothing. So owner means obviously what? You have a right to receive income, right? If you have a property and if you are the owner, obviously if you are the owner, what do you have? You have a right to receive the income, right? If I am not the owner and I don't have a right to receive the income from that particular property, right? And then another condition. Now let's just say A sold building to B. Okay, sold building to B. There is something called as sale deed or transfer deed. The document will be there, right? So A already transferred that building to my name or B name, but B did not go to the register office and then registered yet. It doesn't matter. The building is on whose name? On B name. And then if the B is receiving any income, then we will tax under IFHP. Just because the registration is just a formality, it's a legal formality. Okay, so whether the registration is happened or does not happen, it doesn't matter. If the sale deed is transferred, like agreement is over, the sale is over, then we will tax under IFHP, right? You will be considered as a owner and then you will be taxed under IFHP. So you can say that registration of sale deed is not required, right? And then what else? Then you should be owner in the previous year. What does that mean? Let's just say A transferred that building to B, or A sold that building to B. Now who is the owner? B is the owner, right? So there is something called as X. This transaction is happened in 2024. So X was the tenant. X was the tenant of A. Like when A was the owner, X was the tenant, right? When in 2020, right? In 2020. But due to COVID, he did not pay any rent to A. Then later he got money. X got money. X paid the money in 2024, right? When did X pay? In 2024. But now currently, does A is the owner for that building?
No,
Currently,
no, sir.
does A has a building? No, A does not have a building at all, right? So B become the owner of that property. That there is no property only now, but we are receiving the rent, we are receiving the income. Now then he will say, I am not the owner, so it will not be taxed. So that's why our income tax department will say, right, in the year in which you receive, okay, like in the year in which you receive, sorry, not now, like in 2020 you are the owner, right? You are the owner, for that only he is paying the money. So in the previous year, if you are owner, that is enough. Okay, so whatever I told, it will come little bit under the unrealized rent, that we will discuss later, right? If you see this part clearly, you can discuss here. You should be owner in the previous year, right? So we know that previous year income will be taxed in the assessment year. So that means it doesn't matter whether you are the owner in the assessment year or not. If you are owner in the previous year, that is enough, right? Let's just say 23 and 24 is the previous year, 24 and 25 is the assessment year. This is the year which you have to pay tax. But in this year you already sold the building, that means you are not the owner. Fine, no problem. Last year you were the owner, right? So previous year you were the owner, because of that only, that previous year tax only you are paying. So if in the previous year if you are the owner, that is enough. Okay, unnecessarily we have given a little bit more time to this concept, it is not that big a deal. Next one, this is the last one. See, these are all only theoretical purpose, this pretty much not affect the our questions though. Now whenever there is a title dispute, let's just say there are A, B are there, and then we don't know, there is a ownership title dispute, like who should be the owner of the property, maybe they are both are brothers, right? So then they went to the court. Obviously court will take time, like maybe 3 years, 4 years time. Until that they are receiving some income, because of that property they are receiving some income. Now income tax department will decide for whom we need to, on whose hands we need to charge tax. So if there is any title dispute in ownership, so IT department will decide, like who is the owner of the property, so and who should we charge the tax, until the court decides, right? Until the court decide, IT department will decide. That's all about these conditions. So mainly what you need to remember is, first there should be a property means a building and land connected to building, such building, and assessee must be the owner of the property. The ownership may be freehold ownership or leasehold ownership. Registration is not required, owner in the previous year. If you are the owner in the previous year, that is enough. That's all. Now that's all about that. Let's discuss one more thing. What if we discuss the property, right? And this property you should use for the residential purpose. You can use for residential purpose or commercial purpose, it doesn't matter. Okay, it doesn't matter whether you can use for residential or commercial. First of all, it should satisfy the definition of property. If it is a if it is a building or land connected to building, come to the IFHP, no problem. And if it is residential or commercial, we will tax it. But if the same use, if it is used in business or profession, if it is used in business or profession, then it will go to obviously PGBP. Let's just say there is a house or there is a building which I am using for the hospital, that means it's a profession, doctor, clinic, right? Or you are a CS, you are using for your firm, then again you are using either for business or profession, then it will come under PGBP. It won't come to the head of IFHP, even though it is satisfied the property. So we need to check the use, for what purpose it is used. Done? Next one.
Yes, sir. Done.
Okay. So from now on, it's important. One more thing we will discuss, and we will start directly the important of section 23. So there, it's directly questions asked from that concept only. Finally, there is something called as stock in trade. So stock in trade means what? If I am doing a business, let's just say I am doing clothes business, clothes is my stock in trade. Let's just say I'm doing mobile business. Mobile is my stock in trade, right? Like that. Let's just say you are doing some kind of real estate business. So what will be your stock in trade? Buildings or the stock in trade? So building means nothing but property, right? So if the property is your stock in trade, then what would be the situation? So first of all, you said it's a business. Business means a PGBP, no doubt, right? So there is some little bit change here. Let's just say you are a builder, or you are into construction. That means what is your business? Your business is only constructing the buildings. That's all, constructing and selling it. Is your business is let out? Let out means giving rent. Is your business is giving let outs? No, right? Your main business is not letting out the property. Your main business is building the properties, selling it. Okay, but let's just say for some reason you build a property and you did not sell it yet. Okay, and you gave a rent for some particular time, like just for 6 months, for 2 months, or 1 year, like that. You gave it for rent, or you gave it for let out. So because of that you earned some income, then that will come under IFHP only. Remember this part. Even though you are a business, right? So if you are a business, property will be your stock in trade, right? What is stock in trade? Your property. What is meant by property? We already discussed. Okay, so if you are a builder or constructor, that is not your main business, because letting out properties is not your main business. So because of let out, if you get any income, that will be taxed under IFHP. Let's just say you are a real estate business, or not real estate, you are in the business of letting out properties. That means your main business only give rent to buildings to the people and then earn rental income. Your main business only that. Then no problem. This is simple PGBP, because that is your business. Okay. In this scenario, it is not your business. See, here also business. This is also business. This A also business, B also business. What is our stock in trade? Property. Okay. But in case of A, our business is building and construction, not letting out. Okay, there is something called as unoccupied property. We will discuss much about this later, but let me discuss it here only little bit. So I have a building. Okay, I'm in a business, right? Let's just say I'm a builder or constructor or business of letting out, whatever it is, whether I'm a builder or constructor or business of letting out. If business of letting out, it will come under PGBP. So that means probably I'm a builder or constructor and I have a property, but it is unoccupied. Let's just say I have built or constructed one building. I did not give rent. It just unoccupied. We did not do anything at all. Do we need to tax that? No, we did not earn any income from that. So that's why there is something called as annual value is equal to nil. See, this part you will get a clarity once we discuss remaining concepts. So here I am writing this because to complete this concept. Okay, so you can claim this benefit only for 2 years, right? Again, all this particular point I will explain little bit later. That's all about the stock in trade. So if it is a stock in trade, we need to check, are you a builder or constructor? If you are a builder or constructor, then tax under IFHP. If you are getting any rental income, okay, tax under IFHP. If your main business itself letting out properties, then it's PGBP. Okay, now here we are talking about, in section 22 we discussed what do we need to charge, on what we need to charge the tax, that is annual value. Now how do we determine the annual value? That is the question, right? So this is the way you need to determine annual value. Okay, so first we need to find out something called as gross annual value. See, whatever we are discussing, this is all section 23 only. So gross annual value, from that we will deduct municipal taxes, then you will get the net annual value, then from that we have only deductions, two deductions under section 24. Standard deduction, I will explain everything separately, you just write this part. Standard deduction 30% and interest on borrowed capital. Only these two deductions we have. Then finally you will get income from house property. That's all. So first step is finding out the gross annual value. Now how do we find this gross annual value?
Excuse me, sir.
Yeah.
So I have a doubt.
Yeah.
So earlier you told that vacant land will be charged under the section under PGBP or IFOS, but sir, under stock and trade you have told that unoccupied property will not be taxed. So sir, what will be the difference there, vacant land and unoccupied property?
No, vacant land is something, it's a, like it is not a property only, right? Unoccupied property we used. So definition of the property is building or land connected to the building. Vacant land is not a property according to IFHP. Vacant land is not a property at all. Okay, and unoccupied property, if it is a stock in trade, like that means, like let's just say you are a builder or a constructor, you have constructed a building and then you did not sell it, right? You did not sell it, so that is unoccupied. Building is a property and it is unoccupied by anybody. That means you are not getting any income from that property. Okay, so this particular part we will discuss later. Okay, so why the annual value is nil and 2 years, this part we will discuss later. But there is a lot of difference between vacant land and unoccupied property. Vacant land, yes, it will come under PGBP. So vacant land, this unoccupied property is not a vacant land. Is your doubt clarified or anything else?
Clarified.
Yeah, thank you. There is a lot of difference though. Now GAV, we need to find out gross annual value. Okay, just give me a second. How do we find out that gross annual value? Okay, municipal value, they will give in the question itself. There is something called as municipal value or fair value or fair rent. Okay, we will take whichever is higher. We'll get one figure. Let's just say municipal value is 100, fair rent is 120, then we will get 120. This is the step 1. Municipal value, like this is this will be determined by the municipal authority. Okay, this items will be given in the question itself. You don't need to get into the definition what is meant by, you see here they have given fair rent means, like in that particular area, in that locality, for that property, what will be the rent you can expect. Municipal value means which is determined by the municipal authority, right? But in that particular area, based on the demand, based on the locality, how much rent you can expect fairly, that would be the fair rent. We don't need to get into the definition because these things will be given in the question itself. Okay, municipal value or fair rent, whichever is higher, we will find out. Okay, then there is something called as standard rent. They will only give in the question standard rent. What is the standard rent? This standard rent is fixed according to the Rent Control Act. Okay, so we have three things here. One is municipal authority, municipal value, fair rent based on the locality, people will decide it, and then standard rent is basically Rent Control Act will decide it. Okay, now standard rent, let's just say this is 90 rupees, then we have to take whichever is lower. So which is lower? Then 90 is the lower. This part we will call it as expected rent. This part we will call it as expected rent. Okay, important, expected rent. Then finally actual rent, received or receivable, right? Let's just say I am giving my building rent for 10,000 for 12 months, so 1,20,000 received. Or let's just say you did not pay 2 months rent, so that would be receivable, right? We are going to receive in future, so receivable. So actual rent received or receivable is 110. Then we will take whichever is higher. So finally this 110 is nothing but GAV. Did you guys understand here what happened? Yes or no?
Sir, can you please explain after standard rent?
Okay, so first we'll find out municipal value or fair rent, right? Whichever is higher, you'll get one figure. You'll compare it with the standard rent, then you'll find out whichever is lower. Whatever the figure you will get, that is called expected rent. Then you will compare with the actual rent, then whichever is higher is the your answer, that would be GAV. Shall we do some question on based on this? So basically this is high, low, high. Tisha, is it cleared?
Yes, sir.
Okay, now let's see this one. Jayashree owns 5 houses in India, all of which are let out. Compute the GAV of each house from the information given below. So what is our thing? Municipal value or fair? Municipal value or fair value, whichever is higher, high, low, high. So here 80,000, 90,000, whichever is higher, 90,000 is higher. Okay, then compare with the standard rent. Here standard rent is not applicable, so we will take same 90,000. We have to take whichever is lower here, but standard rent is not applicable, same 90,000 we will take, which is expected rent. Then we will compare with the actual rent or receivable, right? Finally you will get whichever is higher, which is 90,000, whichever is higher. Okay, now let me pick some Tisha only.
Yes, sir.
So house 2, can you tell me what is the municipal value? 55,000 and 60,000. What should I do? Municipal value and fair rent? Yeah,
We will select whichever is higher.
whichever
And
is
select
higher.
10,000.
Okay, 60,000 is higher. Then I need to compare it with the,
Standard rent
so standard rent,
is
whichever
70
is
lower.
whichever is
Lower.
lower. So which is 75, 60,000 is the lower.
Yes.
So 65, 60,000 will be called as, sorry, not 65, 60,000 will be
60,000
called
will
as,
be called as expected rent.
very good. So this expected rent compare with,
Actual rent.
which is
Whichever is
72,
then
whichever
7
is
whichever is higher.
higher, we get the answer.
The answer.
Next one. Now who do we have? Divya. Anybody else? Just give me a name and give me a second, let me charge. Where did I start? Okay, we have Sanjana. Divya, what happened to Divya? Sanjana, can you hear me? or
Yes,
Robin?
sir.
Yeah, yeah, Sanjana.
Yes,
Uh,
sir.
yeah. So first, yeah. So Sanjana, can you tell me what would be the GAV for the house 3?
So in this municipal value and fair rent is equal, so we can take 65,000 only. And so when comparing this with standard rent, we have to take the lower one, that is 58,000. And so the expected value is 58,000. So when comparing standard rent with actual rent, we'll take the highest value, that is 60,000. So the ultimate answer will be 60,000.
Very good. That's it. So 60,000. So you get how we compare, how we find out GAV, right? So that's it for 4 and 5 also. First we will take whichever is higher, right? Then we'll get one figure. Here the figure is 25,000. You compare it with the standard rent, then you will get expected rent, then you will compare it with the actual rent, you will get the GAV. Okay, yeah. Robin, you tell for the 5.
So first we
This
take
is
the
like this:
rent
high,
is
low,
high.
high. Hmm.
Sir, high.
Hmm.
80,000, sir. Yeah.
So 80,000. So municipal value or fair value, whichever is higher, which is
Yes.
80,000. Next,
Th- Then we compare it to
standard rent,
yes, standard rent, sir.
which is 78,000. Whichever is lower, which is 78,000 is lower.
Yes, sir.
Okay, so it's 80,000 or 78,000. 78,000 is lower. Then
1,000.
this 78,000 will be called as expected rent.
Then we will
Then
actual rent, sir. Compare with
actual
actual
rent,
rent.
yeah, then whichever is higher, which is
Yeah.
78,000 will be the higher.
Answer.
This is our
Answer.
gross annual
Maybe, sir.
value. Okay,
Yes.
so from this gross annual value, what we need to do is we need to deduct the municipal taxes, whatever the taxes you have paid. If you deduct that, you will get net annual value. After that, you will go for the deductions. So first part is this part. First you need to find out GAV minus municipal taxes, then you will get the NAV. Okay, now there are different kind of scenarios are there here. Let's just say if the property, whatever the property we are discussing, if the property may be let out or it may be self occupied, that we did not give rent to anybody, we only occupied that particular property, it is self occupied. If it is self occupied, okay, then the annual value, so there is no expected rent, there is no standard rent, because we are not giving rent to anybody, right? So we will take annual value, right? Annual value is equal to nil. So that means no tax will be charged on this particular property. So it will look like this. So GAV nil. So if there is GAV, and then whatever the municipal taxes you have paid, you cannot claim. Okay, because actually NAV only nil. When I meant here annual value, it is net annual value. NAV only we will considering it as a nil. So if you claim any municipal taxes here, NAV will be negative. So that's why you cannot claim any municipal taxes. No municipal taxes, whatever the municipal taxes you have paid, you don't that cannot be claimed here. So NAV will be considered as a nil. So you don't need to pay any tax for this. Fine. There is something for unoccupied property also. Unoccupied property means you need to satisfy some conditions. Then only we will call it as a unoccupied property, or else we won't call that as unoccupied property. So first of all, condition 1. This is normal condition only. It shall not be or should not be occupied by assessee. That means you have a house, but you did not stay there. So that's why it is not self-occupied also. You did not give rent also, rent to somebody else. And condition 2, it is not used for right? Sorry. So why you did not occupy the house? Because of the business or profession, because of your business or profession or employment, where in another city, in other city. You did not occupy your house because you have a business or profession or employment in another city, and in another city you took a house, right? So in another city, obviously you are living in a rented house, lives in a rented house in another city. Don't take city means literal meaning, like wherever you are, city or village, whatever it is. Okay, so that is, these are the reason. Because of this reason your house is unoccupied, then you can claim the nil benefit. Okay, if your house will be if your house is called as unoccupied property, then you can claim the nil benefit. Did you guys understand what is self occupied, what is nil unoccupied? Self occupied means you occupied your own house, your family or some relative, somebody is staying there. So that would be unoccupied means you did not stay there, because all these conditions you satisfied, then you can take the nil benefit. You don't need to pay any tax on it. Now here the question is let out. Let out means you are giving rent to somebody else. So if you are giving rent to people, then obviously you are earning an income on it, so you have to pay tax on it. There are different conditions, different scenarios are there here. Let's discuss all the scenarios. First one is easy. Let out for the full year. Let out for the full year. That means out of 12 months, entire 12 months you have given a rent to somebody else. Or another scenario can happen, right? Another scenario is part of the year let out, and remaining part of the year self occupied. Then what should we do is the question. This is normal scenario, we don't need to much worry about. If it is for the full year, whatever we have done previously, right? Municipal value, fair value. So normally municipal value for the whole year will be given, fair value for the whole year, standard rent for the whole year they will give in the question. For the whole year they will give. So for whole year we will do, because it is a full year we have given let out. So we will find out GAV for the whole year. But here this is only part of the year we have given let out, and then remaining part of the year we self occupied. That we already discussed. If it is a self occupied, what do? We will take it as nil benefit. Then what should we do in this question? Okay, so this is what we should do. Expected rent, we already know how to find out the expected rent. Expected rent for whole year, that means do the normal process, that whatever we have done, high low high thing. So you will get the expected rent, right? After doing high low, expected rent for the whole year, you don't need to split. Then or actual rent for let out period, whichever is higher. Okay, now if you observe one thing, let's just say expected rent, what I am taking for the whole year, right? That means for 12 months I am taking. Normally which one will be bigger, expected rent or actual rent? Think normally. This is actual rent for the let out period only. Let's just say I have let out only for 8 months, but expected rent for the whole year, that means 12 months. Which one will be bigger normally?
Expected rent.
Expected rent only will be bigger, right? So because you did not give for the entire year, you did not give let out for the entire year. Normally expected rent will be the bigger one. So but we are taking whichever is higher, so we are taking bigger one. So this is just extra knowledge. So can I say that there is something called as notional income. That means it is not a real income, it is just a notional income. We are charging notional income, we are just assuming and then we are charging. So that is just for knowledge purpose. Is it clear? Understand? You
Yes,
will
sir.
get more clarity when we do a question on this one.
Yes,
Then
sir.
again there are still, we have so many scenarios. This is one scenario, two scenarios. Then what can happen? What is the another scenario? Scenario 3. So this is an easy one only. So what if, let's just say there is a full house, right? A portion of the house, a portion of the house is let out, and another portion of the house is self occupied. So let's just say there are two houses, A, B. Like let's take it as this is ground floor, right? This is first floor, right? So first floor we have given a rent, that means B we have given a rent, and then A is self occupied by the owners. So this, see, part of the year is different, portion of the house is different, right? This is portion only. So now what we're going to do is treat them as separate entity, not separate entity, sorry, treat them as separate unit. So A will be considered as a separate house, B will be considered as a separate house. Like like how they will charge, like let's just say A entire house is 1000 square feet, then 500 square feet is A, 500 square feet is B, whatever it is, they will come up with some kind of measurements which we don't require it now. So treat them as a separate unit. So for self occupied property, so I'll write like this instead of writing every time. So if it is a self occupied property, then we know you can claim the nil benefit. For let out property, then we will charge like normal. How do we charge? The same way. Okay, like municipal value, fair value, whichever is higher, all these things. Okay.
So can you
Now,
please explain again that the third condition, portion of the house is let out and portion of the self-occupied.
like you in your entire house there are two floors, ground floor and first floor, right? So ground floor you are self occupying, and then first floor you are letting out. That means you are giving for rent. So then you treat them as a separate unit, separate houses. So for A you calculate separately, for B you calculate separately. Okay, while calculating A it will look like this. So GAV nil, municipal taxes you cannot claim. So anyway you don't need to do this also, because directly you can say NAV is equal to nil, okay, minus deductions under section 24. If you remember this part, right? So this part. So this is for the let out property, whatever we discussed here. How do we find this out? Gross annual value, municipal value or fair value, whichever is higher. Then what do? We compare it with the standard rent, we'll get whichever is lower. Then you'll get expected rent, then you'll compare with the actual rent, whichever is higher, right? So then you'll get the GAV. So these are all the process we will do for the let out property. Okay, but if it is self occupied property, you don't need to do all this stuff. You can directly say net annual value is equal to nil. You can start from here if it is a self occupied property. You understand? So if it is a self occupied property, then that portion only, I am talking about only self occupied portion, this portion. If A is self occupied, this portion will just say nil, NAV is equal to nil, and then if there is any deduction that we have to discuss still the deductions, and then we will find out the income from house property. for the ground floor. That one you will get clarity only once we do some question. But now here the question is, what about the let out property? How do we find out for the let out property? So for let out property, okay, so there is no need to treat the whole property as a single unit, and then we will do something called as apportioned, right? So based on some kind of plinth area, built up area, right? Let's just say municipal tax paid is 10,000 rupees for the whole year, okay? And here we are talking about two properties, right? Two portions, one is A portion, another one is B portion. Self occupied property, forget about it, it is nil, we don't charge anything. Now we are talking about B property. So A is, let's just say 50 percentage area is there, and then B is 50 percentage area is there. Now for entire house we paid municipal taxes how much? 10,000 rupees. So for B I will take 5,000 because 50 percentage. Okay, so we will come up with some kind of reasonable basis, and then we'll find out the income from house property. Let's just say expected rent, they are given in the question 50,000 rupees. This is for the entire house, okay, but we will take only 25,000 because for our portion only only 50% is let out property. Did you understand?
Yes, sir.
Right, so we don't take the entire, like while calculating GAV we don't take for the entire property. We will take only, like if our let out portion is only 25%, we will take 25%. If it is 40%, we will take 40%. Some kind of reasonable basis, this will be given in the question itself. Okay, so we will bifurcate like that and then find out the answer. Okay, how do we do that? We will do one question, so we'll get a clarity on that. Now next part. So this is a portion. See, we have discussed three things now. So one is let out for the full year, and next one is for the part of the year it is let out, and then for part of the year is self occupied. Okay, make sure you just write this. When you apply this in a question, it will make sense. Then the third one, a portion of the house is let out, and then portion of the house is self occupied. Okay, next one. Got clarity, right? Can I move on to the next one, fourth one?
Yes, sir.
Yeah, there is something called as deemed to be let out. Deemed to be let out. What does that mean? Let's just say you have A, B, C, D houses, right? You are saying that all houses are occupied by my family only, right? So you are saying that all houses are occupied by my family only. Then if it is that way, then everybody will escape tax by saying that everybody are my relatives, everything is self occupied. Let's just say I'm a, I take buildings for lease, all buildings I'll give for rent. Then I will tell to the income tax department, everybody is my family only, so everybody is self occupied, so don't tax anybody. So that's why government say that fine, if it is, we know if it is a self occupied property, you can take it as a nil value, or if it is unoccupied property also, you can take it as a nil benefit, but you can take only for two houses, any two houses you can take. For example, I will take A and B as self occupied, I can choose, right, self occupied or unoccupied. But remaining C and D, you cannot say that my family is staying, so don't tax it. So this will be, even though whether you have given a let out or not, I don't know, well, assume that it has a deemed to be let out. These houses will be considered as deemed to be let out. Okay, if it is deemed to be let out, then I will say here expected rent is equal to GAV. Why? Because there is no actual rent. No actual rent, right? Because I did not give let out to anybody. So that's why expected rent will be considered as a gross annual value. So here also what I am doing is I am taking something called as notional income. It is not a real income. I am just assuming it. It is a notional income. Did you understand?
Yes, sir.
Okay. Yeah. Next one. I think we are good to do the questions. And remember, if it is a self-occupied property, okay, if it is a self-occupied property, then no municipal taxes can be claimed. Whatever the municipal taxes you have paid, you cannot claim it because you are taking a nil benefit. So you cannot claim the municipal taxes. Just write this one, guys. I will explain this part, only this part later. Let out property. Let's just say it is vacant. Okay, let out property is what? Vacant. They will mention this in the question itself. If it is vacant for the part of the year, and owing to vacancy or not owing to vacancy. If it is because of vacancy, that means if it is because of people did not actually occupy your house, like there is nobody, like people did not take for rent. Okay, if it is because of the vacancy, that means people did not actually are not willing to occupy your house. Okay, then whatever the actual rent you are taken, let's just say I have given rent for 6 months, or let's take 8 months, remaining 4 months it is vacant because there is nobody to occupy my house, right? I cannot give rent to people for 4 months. Then actual rent means you collected rent only for 8 months, then actual rent is equal to GAV. Okay, but if it is not because of your vacancy, because of some other reason, right, that means people are willing to occupy the house, but you did not give your house to them. Why you did not give, that is not required for us anyway. They will mention this part in the question itself. Okay, this I will explain while doing the question itself. Then we will take expected rent is equal to GAV. Again here we are taking notional income because we don't care what is your actual rent, right? So why you did not give, why there is a vacant, it is not because of the vacancy. Then I will take expected rent is equal to GAV. Okay, normally you can take this way. Let's just say I have a tenant right now, and then he vacated the property. Then to find out the new tenant, it will take 2 months time, right, for me. Let's just say 2 months, 3 months. This period I can call it as vacancy. So because of this is a genuine thing. So actual rent, whatever you consider, that will be considered GAV. And if it is not because of the vacancy, then we will take it as expected rent is equal to GAV. So more about this you will get a clarity when you are doing the questions. That's all. We have 23. This is pretty much the core concept of IFHP. Remaining all are, there is one more thing called as interest on borrowed capital. That's it. Pretty much that's it. Nothing else is there. Shall we do questions now?
Yes, sir.
Okay. Now I'm not sure whether you are writing the notes or not. If it's not, you can watch the video later and then write the notes. Let's do all the questions in this one. Yeah, and one more thing is, what if the income, that the property whatever we discussed, what if the property is situated outside India, right? If the property is situated outside India, then why do we care? It is not in India, then we don't tax it. But if you are ROR, remember for ROR, global income is taxable. So if you are earning no income from the property which is located outside India, but still it is taxable in India if you are ROR. If you are non-resident or resident but not resident, we don't tax it. But what about the municipal taxes which I paid outside India? Can I claim that as a deduction? Yes. So even if you pay municipal taxes outside India, you can claim the deduction. Okay, with this knowledge, let's do this question. Rajesh, a British national, a resident and ordinary resident, ROR, in India during the year, he owns a house in London, property outside India, which is let out for £10,000 per month. The municipal taxes paid to the Municipal Corporation of London is £8,000 during the previous year 2023 and 24. The value of £1 they have given 95. Compute Rajesh net annual value of the property for the assessment year 24 and 25. Okay. Now do we tax it or not? Do we tax for Rajesh or not?
Yes, we tax it as it is
Why do we
ROR.
tax it? Yes, because he is a ROR.
ROR.
Very good. Very good. Now can he claim the municipal taxes he paid outside India?
Yes.
Yes, that's all. So GAV, see here GAV, they did not give all the information, they directly mention. So we will receive 10,000 into 12 months, okay, and then we convert it into Indian currency. We get this number, and then whatever the municipal taxes we have paid, we get this number, we get the NAV. That's it. This is a very small question, nothing to discuss about this. Now, if you remember the format, what is the format we have written? First we find out the GAV, then we will deduct the municipal taxes, then you will get the NAV. From there you will deduct the deductions. What are the deductions? We have only two deductions in this question, in this chapter. One is 30% of the NAV, flat deduction. Let's just say your NAV is 1 lakh. Then I will give 30% 30,000. 30% of what? NAV. 30% of NAV I will get. So remaining 70,000 I will tax it. And also if there is any interest on borrowed capital, this is the only concept which we did not complete it. Very some part is there, little bit to discuss. It's not much but very small. So interest on borrowed capital, let's just say you paid 10,000 rupees, then you can claim that also deduction. Then remaining 60,000 is IFHP. Understood, guys?
Yes, sir.
Yeah. Now let's go to the questions, because we have that the questions which we need to discuss. Okay, they have directly given. Okay. Okay, so what about the interest on borrowed capital for self-occupied properties? Right. So when we are discussing about this interest on borrowed capital, we need to find out again, is it a self-occupied property or is it a let out property? See, if it is a let out property, whatever the interest you paid, okay, interest you paid, so interest you may be paid because of the construction. Let's just say for construction you have taken loan, or maybe you taken a loan for repairs or reconstruction, whatever it is. Okay, if you have taken a loan and then you are paying a interest, if it is a let out property, no limits, whatever you have paid you can claim as a deduction. Okay, but if it is a self-occupied property, so maximum you can claim only 2 lakhs. This is for construction. Then for repairs you can claim only, I think 30 or 35, just let me check. Yeah, 30,000. You can claim 30,000 for repairs. And then remember, then again overall it cannot exceed 2 lakhs again. Aggregate, you get this point, right? So aggregate, it cannot exceed 2 lakhs. So maximum you can claim only 2 lakhs. But for repairs specifically, individually, maximum I can collect I can claim a deduction only 30,000, and then 2 lakhs for construction, and then again overall you cannot claim more than 2 lakhs. This is called ceiling limits. So more than this you cannot claim as a deduction. Did you guys understand?
Yes, sir.
Now let's do a question on this. And there is something called as pre-construction interest. How do we calculate? I'll explain. Maybe let me check whether pre-construction question is there in this one. Okay, it is not there. So there is something called as 115 BAC. This is a different provisions, so which is not required now. I will explain this later. Okay, because this thing I need to check the CS book also. I will explain later. Say Mr. Manas owns 2 house properties, one at Bombay. Remember that while we were discussing this, there is a question about this actually, which will come later. A, B, C, D. Okay. Now how many properties I can claim as a self-occupied or unoccupied?
2 property for self-occupied.
Yes. So maximum I will consider two properties. Remaining properties will be called as deemed to be let out.
Deemed to be let out.
Yeah, deemed to be let. Even though I did not let out, I will consider. It will be deemed. It will be called as deemed to be let out. I will consider as if the property is let out. Okay. Now these two, self-occupied. Now the question is, let's just say A is in Mumbai. A is in Mumbai, and then B is in Chennai, and then C is in Hyderabad, right? Or let's say this way. C is in some kind of one village, and then D is in village 2. So obviously, which properties are value more? A is in Mumbai and B is in Chennai. This Chennai and Mumbai properties, right? A and B properties are more. I mean, the value more. So, but we will give option to the assessee. Either, that means you can select whatever you want. Obviously, people who has common sense, they will select C and D because the value will be less, so they can pay the tax less. Later, if they want to change that option, they can change, right? So no matter how many properties you have, maximum you can claim 2 properties as self-occupied at the option of assessee. That is your option. Okay.
Okay, sir.
Now, Mr. Manas owns 2 properties, one at Bombay, wherein his family resides, and others at Delhi. So we have one Bombay property, one Delhi property. So which is unoccupied? They will only mention in the question itself, it is unoccupied. So unoccupied conditions we discussed. He lives in Chandigarh for his employment purpose in a rented house. Yes, that is one of the condition, right? Okay. For acquisition of house property at Bombay, he has taken a loan of 30 lakh at the rate 10% per annum on 1/4/2022. Okay. On 1/4/2022. He has not repaid any amount so far in his respected house property at Delhi. So to construct the house or to buy the house, acquisition means buy the house at Bombay, he has taken a loan of 30 lakhs and he did not repay any money. Okay. And then Delhi house, he has taken 5 lakhs. For what? For repairs. Compute the deduction which would be available to him under section 24B. See, section 24 talks about the deductions. Section 24B talks about the interest on borrowed capital. Now remember, what is the maximum limit for the self-occupied properties? What is the interest limit, maximum ceiling limit?
2 lakh
2 lakh. So for repairs, how much?
30,000.
30,000. For construction, 2 lakhs. So but if you calculate this way, so for Bombay house he has taken 30 lakhs into 10 percentage per annum. Obviously did not repay anything, so it will become 3 lakhs. And then for Delhi house he has taken 5 lakhs into 11 percentage. Again you will get some number, right? So it will be 3 lakhs here, it will be 55,000 here. And also whenever you are calculating, you see here they have calculated separately for Bombay house, separately for Delhi house. Make sure you also do the same way. Okay, so maximum how much we will give? 2 lakhs only. The Bombay house we paid 3 lakhs, but we give 2 lakhs. But for repairs we incurred 55,000, but maximum we give 30,000. So total deductions 2 lakh 30,000. But again we discuss one more thing. Overall we will give 2 lakhs only. Is this clarified or not?
Yes, sir, clear.
Right? So self-occupied properties, these are the ceiling limits. Maximum 2 lakhs, overall aggregate 2 lakhs, and individually 2 lakh and 30,000. Next one. And interest will be allowed on accrual basis. That means it doesn't matter whether you paid it or not. Okay, you can claim the deductions. That means you did not pay, you're going to pay. Okay. Interest on interest is not deductible. Interest on unpaid interest. Interest on interest is not allowed. Okay. So there is something called as 115 BAC. Normally if you see the slabs are there, right? So 2,50,000 up to nil, and then 2,50,000 to 5 lakhs, some rate will be there. 5 lakh to 10 lakh, some rate will be there. But if you apply for 115 BAC, separate rates are applicable. So if you are choosing 115 BAC, then no deductions will be applicable for the self-occupied property. Again, that 115 BAC will be discussed later. So this part we discussed already. Property let out for the entire year. How do we find out? First we need to find out the GAV. How do we find out GAV? High, low, high thing. Okay. Then you will do the deductions. For let out property, there is no ceiling limit. That ceiling limit is applicable only for the self-occupied properties. Now let's see this question. Anirudh has a property whose municipal value is 1,30,000 per annum. Fair rent is 1,10,000. Standard rent they have given. The property was let out for a rent of 11,000 per month. Okay. Okay, so can you tell me what is GAV for this? Quickly. What happened? What happened, guys?
So can you please again show?
Yeah. Just a sec. Yeah. right? 1,32,000 will be GAV.
Okay.
Understood or not?
Is that unrealized rent is known as
That I'll explain later. Let's
rent?
assume that there is no unrealized rent.
Okay.
11,000 into 12 you do.
Yes, yes.
Okay.
Hmm.
Yeah. So then you'll get 1,32,000, right?
Yes, sir.
Okay. Now there is something called as section 25A. In section 25A we are going to discuss about this unrealized rent. So in section 25A, if anybody, if our tenant, if our tenant did not pay the rent, then what should we do? So while you are calculating the actual rent, can I deduct it or not? Yes, you can deduct it. If you, while you are calculating, because you did not realize for 12 months, you realized only for 11 months, let's just say. So then actual rent will be calculated only for the 11 months. But if to do this you need to satisfy the conditions which is given under the rule 4. So first of all, your tenant should be bona fide. That means bona fide means he does not have a intention to deceive. See why they need to keep all this conditions. Why? Because what I'm gonna do is to evade the tax. I'll simply tell my tenant did not pay the money, so I cannot pay tax. People can do that. So that is the reason. Where is that? Oh, sorry, that will come under arrears of rent. Yeah, I need to explain the difference also. Just a second, guys. Yeah, here itself. Yeah, so treatment of unrealized rent, like I said, there is a rule 4. In that rule 4, they have mentioned some conditions. Why we need to do that? Because if our tenant is we'll simply say to that income tax department, my tenant is not paying the money, I have taken all the steps, he did not pay the money, so I cannot pay any tax to income tax department. That's how he will escape the tax. So that's why, fine, you don't need to pay tax if these conditions are satisfied. So the tenancy is bona fide. That means you have no intention. That means you have no intention to deceive the income tax department. And then whoever is not paying, let's just say there is a building and then B is the tenant. If the B is not paying, then make him vacated, right? Or you have taken steps to vacate him from that property. And also you did not give any you did not give for rent in any your house, in any other property, in any other of your property he did not stay, right? And you took all reasonable steps and you have done, you filed a case against him, everything, all legal proceedings you have taken. If all these conditions are satisfied, then rule 4 is satisfied. Okay, then unrealized rent, that you should not include any amount from the actual rent. So in other words, actual rent minus unrealized rent, actual rent minus unrealized rent. So actual rent is 12 months, like you did not receive for 1 month, so that means take only for the 11 months. But this is when the rule 4 is satisfied. See, you see this one, this particular C condition. See, because here the owner, landlord and tenant may design some scheme to evade the tax. Tenant will say that I will be in your houses, I will pay secretly money to you, and you tell them that I did not pay any money. So that's why, if the tenant is a default tenant, why are you giving house again, right? So he should not stay in any of your property because he is a defaulting tenant. Now come to our question. This is unrealized rent. Then about that we will discuss little bit is there in 25A also. There we will discuss. Now we have enough concepts to complete this problem. Yeah. So now 11,000 per month is unrealized rent, and then they mention in the question itself rule 4 is satisfied, and he paid 10% municipal taxes of the municipal valuation. Municipal valuation is 1,30,000. 10% will be 13,000. Interest on borrowed capital will be 40,000 per year. Now tell me, is it a let out property or self occupied property?
Let out property.
Let out property. So is there any limit, ceiling limits for this interest on borrowed capital? Ceiling limits?
No.
No. That's it. Now come to the GAV, right? So if you see GAV part, we got 1,21,000 only, because that actual rent we got 1,32,000, right? From that you can deduct the 11,000. Either you can do this way, or we can find out in a normal way. GAV is equal to 1,32,000. From here you can deduct it minus unrealized rent, which is 11,000. Okay, so 1,32,000 minus 11,000, which will be 1,21,000 only. In any way you can do it, but this way is only better, right? So while you are doing the actual rent, if there is a unrealized rent, make sure that you deduct it. This is very important. Make sure that you deduct it. Now any doubt how we got 1,21,000?
No, sir.
No doubt, right? Now municipal taxes we already know 13,000, so you get 1,08,000. Then standard deduction 30% of the NAV. So NAV is 1,08,000 into 30%. You will get 32,400. Then no ceiling limits. Total interest on borrowed capital will be allowed. Finally, we will get IFHP 35,600. Okay.
Yes, sir.
Okay. Yeah. Okay. So make sure whenever they have given in the question, whenever they will ask you to do IFHP, immediately do the format. What is the format? GAV minus municipal taxes, I'll get NAV, minus deduction under section 34, 30% is standard deduction, and interest on borrowed capital. That's all. IFHP is over. This the format is important. Next one. Next one, what do we discuss? Let out property is vacant for part of the year, right? It is vacant for the part of the year. That means in remaining year it is unoccupied, right? Nothing is there. Did we discuss about it? We discussed, I think, at the end. If you see, let out property is vacant for the part of the year. We need to check, is it because of the owing to vacancy or is it not because of the vacancy? Now that will be mentioned in the question itself. I'm pretty much sure they would have given here. Now Ganesh has property whose municipal valuation is 2,50,000 per month. Fair rent is 2 lakhs per annum. Standard rent they have given. The property was let out for 20,000 per month. However, the tenant vacated the property on 31/1/2024. Okay, unrealized rent they have given, and all conditions of rule 4 also satisfied. He paid municipal taxes at the rate 8% of the municipal valuation, and interest on borrowed capital they have given. Now tell me, it is let out property is vacant. Is it because of the vacancy only?
Yes, sir.
Yeah, because they specifically mention, however, the tenant is vacated the property on 31/1/2024. We did not find anybody new. Okay, is vacated, so it is because of the vacancy only. If it is because of the vacancy, then what do we do? You need to remember this part. Then we will take actual rent is equal to GAV only. Okay, if it is not because of the vacancy, then this will come into the picture. Okay, let's see. Same thing you guys do. First one, 2,50,000 municipal value. Pair rent is 2 lakh, whichever
Like
is
higher,
higher. Then standard rent 2,10,000, whichever is
lower.
so 2,10,000 will be called as expected rent. Then now actual rent. How
Hmm.
many months we have let out? How many months we have let out? He was vacated on this date. So you can start from the beginning only. Beginning of the year, which is 1/4/2023. How many? It's easy only.
10
Yeah,
months.
yeah, 2 months he did not stay. That means 10 months he stayed. So you multiply with 10. Okay. So what did we get? We get expected rent 10,10,000. Yes, which is this. Then while calculating the uh, actual rent, okay. So what is the actual rent? Can you guys calculate and tell? 20,000 into 10, it will be 2 lakhs. 2 lakhs minus unrealized rent they have given in the question itself, which is 20,000. So 2 lakhs minus 20,000, it will become 1,80,000. Okay. Then what do? We will take whichever is
Whichever is higher,
whichever
whichever
is
is lower.
whichever is higher only, right? High, low, high.
Yes, yes, higher.
Yeah. Okay. Yeah. Now just a second. Now they have done in two ways. Okay. You can do in this way also, or you can do it that way also. Just give me a second. Now if you see this part, step 4, in this case the actual rent is 1,80,000 lower than the expected rent owing to vacancy. Since had the property not been vacant, the actual rent would have been 2,20,000 being the notional rent for February and March 2023. Therefore the actual rent is the GAV. So what did we decide here? Come to this part. Actual rent is equal to GAV, right? What is the actual rent? Just a second. Yeah. What is the actual rent here? Let's just say there is no vacancy. If there is no vacancy, what is the actual rent?
1,80,000.
No. If there is no vacancy,
2 lakh.
20,000 into 12, 2,40,000,
Yes.
right? So 2,40,000 minus unrealized rent 20,000, it will be 2,20,000 only, right? Did you understand? See, no. I'm not explaining this question. I'm explaining something else here. If this is not because of the vacancy, okay, like if there was, okay, let's do one thing. Let's leave this part. What did we say here? Actual rent is equal to GAV, right? If it is because of the vacancy, then what do we take? Actual rent is equal to GAV, right? Tisha,
Yes, sir.
what is actual rent in this question? Forget about this part. What is actual rent in this question? 1,80,000 only, right?
Yes,
Right,
1,80,000.
in this question, yeah, actual rent is 1,80,000. Actual rent received 1,80,000 only. So
Yes.
normally what do? We will take whichever is higher, no? Then
Yes.
we have to take 2,10,000, right? Then why
Hmm.
you are taking 1,80,000?
We less unrealized rent as
No,
per.
no. You did not get this here. See here, this is expected rent. You understand how we did this,
Yes, yes.
right? And then you also understand how we got the actual rent 1,80,000,
Hmm.
right? Normally what do? We will take whichever is higher,
Third is higher.
right? Then why I am taking 1,80,000 only? Why I am not taking 2,10,000? Whichever is higher is
Yes,
2,10,000,
yes,
right?
yes.
Did you get that doubt?
Yes, sir.
Okay, what is the reason?
Just
I highlighted that. That's what we discussed, no,
oh,
here.
okay. Yes,
Okay.
yes,
So
yes.
if it
owing to
is because
vacancy.
of the vacancy, then you take actual rent is equal to GAV. So it obviously expected rent will be more only. Why?
Okay.
Because expected rent will be for the whole year.
Hmm.
But actual rent is only in this question 11 months only.
Yes.
Sorry, 10 months only.
Hmm.
Okay. So actual rent will be less only. Okay. So but we will take that actual rent is equal to GAV, not, we don't apply this concept here.
Okay.
Whichever is higher concept we don't apply, because it is vacant for the part of the year due to vacancy.
Hmm.
So we will take actual rent is equal to GAV. Everybody
Okay.
understood? I know,
Yes.
like, by reading this, I kind of confused it. Forget about this. So you understood this part. Tisha, can I move
Yes, sir.
on?
Yes,
So,
sir.
okay, now GAV is equal to 1,80,000. Then municipal taxes, we deducted it. This is not unrealized rent, this is municipal taxes. Okay, municipal taxes, they have given percentage in the question, and municipal value is 2,50,000. Then we get 1,60,000. Then I don't think so I need to explain about this. This is the flat deduction of 30% of NAV, and then whatever the interest on borrowed capital given in the question, we will give without any ceiling limits. Is this question completely understood?
Yes, sir.
Finding this is the biggest thing. So here, whenever there is a, if they give like this, okay, what is our situation? Let out property is vacant for the part of the year due to vacancy, then actual rent is equal to GAV. We don't apply whichever is higher, like, after finding out the expected rent, we don't apply that whichever is higher thing, because obviously if you apply that, obviously actual rent will be lesser only, because it is not occupied. Okay. So then you see this part, if the actual rent is lower than the expected rent because of the vacancy, then take actual rent is equal to GAV. But if it is because of some other reasons, whatever the reason it is, right, if it is not because of the vacancy, then take expected rent is equal to GAV. Okay. But there are some scenarios, in spite of the vacancy, actual rent is higher than the uh, expected rent, then take actual rent is only GAV. Anyway, the same thing, you don't need to worry about this. Let's just say actual rent is 10 lakh rupees, expected rent is 8 lakh rupees. Then what do we take? Actual rent only we will take. It is because of the vacancy. Understood? Did you understand this step 4 completely?
Yes, sir.
Right, whatever we have written here, the same thing. If it is vacant for the part of the year, check it is because of the vacancy, then take actual rent is equal to GAV. If it is not because of the vacancy, then take expected rent is equal to GAV. Next one. This is simple. If it is a self-occupied or unoccupied property, what do we do? NAV is equal to nil. Then interest on borrowed capital, like, maximum will give 2 lakhs for construction, 30,000 for repair, overall 2 lakhs. Now let's do this question. Is everybody still there or gone?
Yes, sir. Still there.
I don't think so. Only Robin and Sanjana, 3 people only there. Fine.
Yes.
Are you guys understanding, right? Because that's important. If you're not understanding, I might be going a little bit fast here. So after that, you can use the concept, whatever the notes I have written here. You can use that concept and solve any problem. Right? Make sure that the notes is important, and you can use this video again and then solve the problems. Purna, one house property, is there in Indranagar in Bangalore. Fine. She stays with her family in the house. That means what? This Indranagar house is
Self-occupied.
self-occupied. Very good. Okay. The rent of the similar property in the neighborhood is 25,000 per annum. What do we call this? Rent of the similar property in the neighborhood is 25,000 per annum.
Let out.
Per month. This is called fair rent, can I say?
Yes, yes, sir. Fair rent.
That's what we discussed, some definition, fair rent. Okay, the municipal value they have given, municipal taxes they have given. Now, for self-occupied property, do we claim the municipal taxes? Yes or no?
No, sir.
No. Good. The house construction began. Okay, wait just a second. Okay, this is pre-construction interest. We just have to discuss one question. Just one more concept. Pretty much, like this chapter is over. There is something called as co-owned property and all, that is very very small, that is not to worry about it. While doing the question itself, it will be done. There is something called as big one in this one, like one of the biggest concept and important concept also, pre-construction interest. Pre-construction interest. What is meant by pre-construction interest? Let's just say I bought the house in 2000, like the house came into use, the house start, like it is I can start using the house in 2020. Let's just say I started construction from 2015 and it is completed in 2020, so I can start using the house from 2020, right? So during this period I should have borrowed the money to construct the house, and then I should have paid interest for it, or I have to pay the interest for it. So what about that part? That is pre-construction interest. Before constructing the house, whatever the interest I paid, I can claim the deduction now only. Now you might have a doubt, why you did not claim deduction in 2015, 2016, 2017, why are you claiming in 2020? Because there is no house only. If there is no house, there is no income. If there is no house property income, how can I claim the deduction? Right? Because the house came into picture in 2020 itself. So whatever the I'm getting started income from, I started getting income from 2020 only. So in 2020 only I can claim the deduction, whatever the interest I have paid in the previous years. Now let's just say from 2015 to 2020. This is pre-construction period. In this pre-construction period, let's just say I have paid 60,000 rupees interest, or paid, or I have to pay, right? Because interest will be allowed on accrual basis, right? So it doesn't matter whether you paid it or not. So 60,000 rupees can I claim at one shot in 2020? Let's just say my income is 1 lakh rupees. Can I just say 60,000 rupees interest on borrowed capital, then remaining 40,000 rupees will be taxable? No. This whatever the pre-construction interest you have paid, you can claim in 5 installments. You cannot claim at one shot. That is the only thing you need to know. So first you need to define, or you need to find out what is pre-construction period, and then what is pre-construction interest, and then how much I can claim this year. And as usual for self-occupied also same this concept apply. Let out or self-occupied, but self-occupied maximum 2 lakhs, and for let out no ceiling limits. So make sure you write these steps, guys, because based on these steps only you can find out the pre-construction interest. Every time you apply these steps. Not only when I meant construction, it does not mean that for acquisition also same thing applies. Let's just say I bought the house in 2020, but I started paying the EMIs, right? Like I bought the house on under EMI. I paid 2016, 2017. I paid EMIs along with the interest. In 2020, I got the house, right? I started getting rental income from 2020. This is acquisition, not construction. I acquired the house in 2020, but before acquiring the house, I have incurred some interest that I can claim. Again, that interest should be incurred for the house only, not for some other purpose. Okay, this pre-construction interest, step 1. date of completion of construction. Date of completion of construction. Okay, if you find out when it is completed. Step 2, preceding 31st March. Okay, so what does that mean? So let's just say construction is completed on 1/4/2018. So what will be the preceding 31st March? Obviously 31/3/2018 only. Like whatever like preceding 31st March. What like if it is completed on some other date, then go back and check when is the 31st March. So that one, or you take date of repayment of loan. Okay, this is so important. You find out whichever is earlier, whichever is earlier. You take whichever is earlier. So when did you repay the loan? Date of repayment of loan. If it is given in the question, let's just say it is not given in the question. Most of the questions they won't give. They will mention that you did not repay. Okay, date of repayment of loan. Then if in step 3, this is easy, you will find something called as pre-construction period. Pre-construction period. See, first step 1 and step 2 we have done to find out what is the pre-construction period. Okay, so then pre-construction period is equal to date of the loan borrowed, on what date you borrowed the loan. This will be the start date, start, to step 2 date. This will be the end date. So this period will be called as pre-construction interest. Sorry, pre-construction period. We'll do a question, don't worry. Then step 4. This is easy. You'll find out pre-construction interest. Right? So you find out the pre-construction interest, like apply the percentage, whatever it is. Let's just say if it is 10 lakhs into 10%, then 1 lakh is the pre-construction interest. Then step 5. In step 5, step 4 divided by 5. See, like I told you, this 1 lakh you cannot claim at one shot. Right? Entire pre-construction interest you cannot claim at one shot. You have to claim in 5 installments. So step 4 divided by 5, that 1 lakh divided by 5. Okay, now we need to check one more thing though, which is may not be tested for you guys. So what happened, that means in 5 installments only, in 5 years only I can claim the deduction. I cannot claim more than that. Let's just say in 2018-19 I started paying the interest, right? Completion of construction, completion of construction is 2018 and 19, so obviously I will be paying the interest also. So I can claim only for 5 years. I cannot claim more than that. Anyway, the step 6 we will discuss later while doing the question. It will be a little bit confusing. So make sure you note this. So first you need to find out the pre-construction period, okay, which is this part. If you find out the pre-construction period, then it is easy. This part is important. We'll do a question also, if possible today only we will do it. Guys, understood?
Yes, sir.
Yeah. So now let's come back to our question. So here the construction was completed on